The entire world, it seems, is in an everything bubble. Consider this. The stock market's at all-time highs. Home prices have never been higher. Bitcoin, gold, silver, national debt, even Pokemon cards, all breaking record levels. Everything's booming. But when everything's going up, all at the same time, you have to ask yourself, are we in the final stage of the boom before the bust? Because history shows us something simple. Booms don't last forever, and when the party goes on too long, the hangover tends to hit even harder. So today, I want to walk you through what's really going on behind all these all-time highs and whether this economic surge is a sign of strength or the calm before a badly needed reset. When everything is sky high. Let's lay it out. Right now, almost every major asset class is sitting at or near record highs. The stock market recently hit an all-time high. Home prices through the roof with the median sale price over $422,000. Bitcoin recently crossed over $125,000. Gold reached over $4,000 an ounce, the highest in history. Silver passed $51 an ounce, an all-time high. The money supply still massive even after the Fed's tightening. The national debt near $38 trillion and climbing. Cumulative inflation since 2020, well over 20% according to my calculations, and that doesn't even include the effects on the recent tariffs. Just about everything is sky high. But here's the problem. These aren't just random bubbles. They're all happening at the same time. Meanwhile, real people are feeling the pressure. Layoffs are way up. Homelessness figures are ever increasing. Credit card delinquencies are rising. Bankruptcies are at record levels, and savings are being drained. For many regular people, it doesn't feel like a boom. In fact, this disconnect is kind of rare. It's not a sign of real strength. It's a warning sign. What's driving this everything bubble? So how did we get here? How can stocks, homes, Bitcoin, gold, even government debt all be hitting all-time highs at the same time? Consider that trillions of dollars were printed. It starts with the money, specifically the M2 money supply, which is a broad measure of the total amount of money circulating in the economy. M2 includes highly liquid assets like cash, checking, money markets, CD accounts. During the pandemic, M2 exploded. The government and the Fed pumped trillions of dollars into the system in just a few months. And while the Fed has tried to shrink it, M2 is still sitting at near record levels. Those trillions of dollars doesn't just vanish, it chased investment returns. It went into stocks, real estate, cars, crypto, collectibles, even gold. So when you see prices soaring, it's not just normal supply and demand happening. It's excess liquidity bidding up the prices of everything. And that's how you get asset bubbles. And now the Fed is trapped. And they know they created this mess. They try to fight inflation by raising interest rates, but they can't go too far without breaking something. Why? Because the US government owes about $38 trillion. And based on recent trends, the US adds about $1 trillion of debt every 5 or 6 months. Higher interest rates mean higher interest payments, and the US is already spending more on interest payments than on national defense. The truth is, the Fed doesn't have many good options left. At this point, they can either save the economy or save the US dollar, but maybe not both. That's why markets expect the Fed to cut rates again soon. But here's the twist. Rate cuts tend to reignite the speculation, so we end up right back where we started, with more money chasing fewer real assets. And now, here's the human side of it. Fear of missing out, emotion, and speculation. We've seen this behavior before. In 1999, in 2006, in 2021, When people believe prices can only go up, they stop thinking rationally. Bubbles aren't just financial, they're emotional too. Everyone's looking for the next stock to double. Tech stocks are hot again. AI is the next big thing. Crypto influencers are pumping alt season and Bitcoin to the moon because this time it's different, they tell themselves. Gold and silver bugs are screaming, yes, this is finally our moment. And maybe it is, but maybe it isn't. Because once the mood shifts, markets can reprice in a matter of a few short days. I've seen this kind of euphoria before, back in the dot-com bubble days, and again before the 2008 great financial crisis. As an investor during both those times, I remember people saying, this time it's different. But of course, it wasn't. What happens next and how do you prepare? So where do we go from here? Honestly, no one knows for sure, but history does give us clues. Let's talk about it. Scenario 1, the soft landing. This is the best case scenario. Inflation cools down, the Fed lowers rates without reigniting inflation, markets stabilize, we have a soft landing. It's rare, but not impossible. Scenario 2, the hard reset. But more often than not, something in the system breaks. A bank collapse, a credit crisis erupts, a foreign event shocks the system, and suddenly the boom is over. Markets take the stairs up and the elevator on the way down. Once confidence cracks, the correction comes fast and it's usually brutal. So how do you prepare? I'm not here to scare you. I'm here to try to help you think clearly and help you prepare while things still look kinda okay. Let's talk about a few simple ways to protect yourself. Nothing extreme, just smart moves anyone can take. Trim your exposure. If you've had big gains in the market, now might be a good time to take some profits off the table. You don't have to sell everything, but locking in some gains could give you peace of mind if markets correct. FYI, that's what I did. Diversify your holdings. Don't put all your eggs in one basket, and that includes stocks, crypto, or even real estate. Spreading out your risk helps you sleep better at night, especially when markets get shaky. Build cash reserves. A solid emergency fund, even just 3 to 6 months of expenses, gives you options. If a job loss or market drop hits, you're not going to be scrambling or forced to sell assets at the worst possible time. Own real assets. Things with intrinsic value, like gold, silver, land, or even productive businesses, they tend to hold up better when paper assets fall apart. It's not about doomsday prepping. It's about owning real things. Reduce bad debt. If you've got high interest credit cards or loans, now might be a good time to work on paying them down. Debt burdens become a lot heavier when the economy slows down and interest rates aren't likely to fall fast enough to help you out. Stay flexible. Maybe the most important one, don't get locked into rigid plans. Keep your options open, whether that means cash on hand, flexible investments, or simply being mentally ready for anything. None of this is about panic. It's about being prepared so that if a correction or crisis does come, you're not the one caught off guard. And let me say this because it's important. Don't let the illusion of prosperity trick you into complacency or bad decisions. Just because the headlines are glowing doesn't mean everything's winning. In fact, wealth inequality in the US is now at levels we haven't seen in generations, some say since the 1920s. And when the bust comes, it's not the ultra wealthy who get hit first. It's the people who are over-leveraged, overconfident, or overexposed. So let's bring it full circle. When everything's hitting all-time highs, stocks, home prices, gold, silver, Bitcoin, even the national debt, it's not always a sign of strength. Sometimes it's the final stage before the bust. Either way, it's better to be prepared. Let me know in the comments what you think. Have you been noticing this everything bubble that's happening all around us? And are you concerned? I'd love to hear your thoughts. And if you appreciate this kind of grounded, real-world financial insight, consider becoming a channel member or supporting me on Patreon. It truly helps me keep on making videos like this one. Thank you so much to those who've already signed up. And if you want to go deeper and understand why our paper money might be doomed, check out my video up here. I think you'll find it quite eye-opening. Thank you so much for watching, and I'll see you in the next one. Take care.